flat as ever when we last saw the market. But yes, a 2 times of a percent uptick coming in. There's a mild recovery coming there. About a 40-point uptick on the spot basis on the Nifty right now. 25,686 is where we are at. The India VIX continues to remain below that 12 mark. Nifty Bank has become absolutely flat once again. Sensex seeing some good gains. It's ITC, Kotak, HUL, Bharti Airtel. These are some of your top top Nifty gainers. But let's get into conversation with Mr. Sahaj Agarwal, Head of Derivatives at Kotak Securities. And we also have Mr. Amrish Baliga, Independent Market Analyst, joining us on the show on the fundamentals. And of course, Sahaj has joined us on the technical. Sahaj, hi, good afternoon. Talk to us about some momentum that we're seeing in some of the FMCG names. How is the index shaping up for you right now? How are you looking at it, given that it's the top sectoral mover today? A 2% uptick on some names some names from the FMCG basket. ITC is up about 4.5%. HUL, UBL, they all do well. What's looking good from the FMCG pack?
Yes, first of all, good afternoon to you and good afternoon to all the viewers. I think you've rightly identified the FMCG space is providing certain value opportunities for sure. Even in terms of the technical setup, we have select opportunities which look positively biased. This sector in particular has witnessed quite a lot of underperformance in the past few months, if I would say, and certain stocks like an ITC got kind of hammered because of specific news flow. My take out here would be, there are certain stocks which are providing just value, like an ITC, maybe that could be a value proposition. But for me as a trader, I would like to have a combination of value and momentum both. And out there, HUL shines outright. I think the stock has got a very strong trend support around the 20 to 40 odd mark. And for the last few months, it's held on to that level. Given the current market setup, the recovery that we've witnessed in the short term, I think HUL is one pick that I would really like and would place my stops at around 20 to 40, and on the higher side, 2,700 could be on the cards in the next few weeks.
Okay. Yeah, that very strong move, 3%, evident on HUL and evident in terms of the way in which the Nifty FMCG index has also moved. You can see those constituents buzzing in trade. Ambrish, consumption, believe FMCG is turning a corner. I mean, we've waited very, very long for this to happen, and some of the multiples in any case have been elevated outside of cigarette stocks, of course. They have been elevated. Risk reward likely turning favorable in your opinion?
In fact, we were expecting FMCG to perform immediately after the GST cut. But unfortunately, at that point of time, it did not happen. But then I think the fresh rally has started because the way you see consumption growing, at least over the next few quarters, if not the next few years, you really can't go wrong on the FMCG stocks. And whatever had happened to ITC, that increased excise, clearly was an opportunity to buy at lower levels, no doubt. Even now, one can buy ITC because I think the upside is clearly about 400, 425 for the stock. And if you look at the history, you see the last 2.5 decades, whenever additional taxes were imposed on cigarettes, ITC had cracked. And if you look back, that crack was always a buying opportunity. And it was the same thing this time. I mean, we saw the crack from about 390, 400 levels to closer to 300. So that was a buying opportunity if you're looking at longer term. If you're talking about the other FMCG stocks, clearly something like a Dabur, Imami, Jyoti Labs, I think these are the ones to be looked at.
Okay, so that's on the entire broader consumption space. But while we're talking about some stocks to watch out for, let's keep a close eye on JM Financial on the back of its earnings. We spoke with the management from the JM Financial group of stocks. How have the performances been in terms of earnings? What is the outlook when it comes to this set of stocks?
We've seen an extremely good move in these stocks if you're talking of the last 12 months. But JM Financial is one of those few where we have seen a decent decline. You see from about September onwards, we have seen the stock nearly losing about 45%. But then with the sort of numbers which have come, I think at these levels one could look at buying because I think it's over discounted at this point of time.
what would your favorites within this pack be? I wonder, Ambrish, because when I was speaking with the management of JM earlier this morning, he was suggesting that the 275 crore odd that they're clocking regularly now in terms of profit after tax quarterly is the kind of run rate which is very, very sustainable. Now, you give or take a few, but 1,000 crore base. I asked him for 1,100 crore base. He told me that even 1,100 crore is a decent base to now look at. And now, in terms of profit, it will only grow from here, is what he said. Now, they are cyclical businesses as well. But at 10 times earnings, 1,100 crore as the base in terms of profit as per management, is JM an interesting buy? Are there others in the basket which you're looking at?
No, like I said, JM could be an interesting buy from a bounce back angle. I mean, it may not really be in my long-term portfolio. I mean, I would be more positive, in fact, on the PSU banking space as compared to this from a longer-term perspective.
Okay, so that's the take coming in on JM Financial on the chart. Mixed set of numbers, largely looking okay, but a 3% cut coming in on that stock. Time now to slip into a very short break. On the other side, we're going to be talking about some more buzzers today, look at some more numbers, and get an expert check on both the fundamentals and the technicals. Stay tuned and we'll be right back. Half an hour or so, and BEML is the one to talk about. The revenue has come in at 1,083 crores, which is an uptick of 24%. So maybe that looks good compared to estimates. But if you take a look at the EBITDA has seen a fall. It's just come in at 3.3 crores compared to about 60 crores. So it's a very massive fall of about 95% on the EBITDA. The revenue looks good, but there's a loss this time around, a net loss of 22.4 crores compared to a profit of 24.4 crores on a year-on-year basis. So yes, a big slip coming in when it comes to the profitability too. EBITDA margins are microscopic in nature, if you could call it even that, just a 0.3% EBITDA margin this time around compared to 6.8%, a very lofty cut on a year-on-year basis. Just trying to understand a little bit better what has dented BEML's numbers this time around. It's multiple factors like deferred tax, that is something that is denting the numbers. Hike in material cost, the material cost for the company is up 38% on a year-on-year basis. Other expenses has also weighed on profitability big time this time around because it's a 79% hike on a year-on-year basis in hike in other expenses too. And they also have given a lot of advances to MAMC consortium and ongoing subsidiary liquidation. So that is also eating away into their pie profitability. So yes, that is something that doesn't look good right now for BEML. And the order book for the company as of 31st December stands at 16,349 crores to be precise. But yes, it's a beat on the revenue when you compare it with what the consensus estimate is. But weakness all throughout, miss on the EBITDA, miss on PAT, and margins are barely anything at just 0.3%. So that's on BEML, and that's the reason why we're seeing such an elevated fall. Yes, 7.5%, although the stock has very nominally improved after hitting rock bottom for the day today. It was about 8.5% low, but yes, a little bit of a recovery, but nonetheless, it's a 7.5% cut coming in on the stock, Harsh.
Yeah, absolutely. And that cut looking sharp. Sahaj, what do you make of this on charts?
This one, from the positional perspective, I think the stock has been in a corrective phase since quite some time. I would say the last 6 months have just been a corrective phase where the stock has gradually trended downwards. From the short-term perspective, I believe there's a support zone around the 1550 mark. So this particular negative news that is kicked in terms of the results of the reaction that the stock is facing, maybe around 1550, I wouldn't mind taking a contra bet because there's a significant weekly support zone out there. So yeah, I would wait for around that price and then maybe just play a short-term reversal trade rather than a larger trend that kind of unfolds. So around 1550, a short-term reversal bet is something that I would be comfortable with.
Okay. How is this one looking from a fundamental perspective? Amrish, how would you play the railway and the infra kind of theme? Would you play through BML? Would BML at all feature?
No, again, talking about the BML earnings, I mean, if you look at the past earnings very carefully, typically the June earnings are negative. September and December are small compared to massive figures as far as March is concerned. So I think for BML, the March quarter is the most important. So we need not be too bothered about the sort of earnings which have come in December. I mean, although it's a bit disappointing, but we should remember that the stock also has corrected, I mean, quite a lot. So from that point of view, I would be a buyer at these levels in case we see a further fall. I mean, I would be a buyer. And if you're talking of the railway as a story over the next 2 to 3 years, I think that's the I mean, space to play in. I mean, if you ask me to compare between defense and railways, I'll surely give more weightage to railways. And one of my picks out there would be Titagarh Rail.
Okay, let me push you a bit more on this, Ambrish. So you said this is looking attractive, yes, but you also mentioned that if the stock were to fall more, it'll look really interesting. How much more from here for it to become a high conviction buy for you?
No, I mean, even the current levels, I would be a buyer. Like I said, in case it falls more, maybe like in this fall, it can go to levels of about 1500, 1525. I think at those levels, you should average out further.
Okay, noted. All right. There's also SBI and numbers expected later, in fact, tomorrow on Saturday, as always, as has become the norm when it comes to banks. The net interest income number is expected to go up by around 9% That's the projection. Around 45,000 crore is where that NII will come from. The margins might see a lift by around 2 to 3 basis points. So around 3% is the kind of margin number that is penciled in. Operating profit will come through very, very sharply. It's likely to rise around 19% on a YOY basis, and profit after tax is expected to increase by around 5% odd. Around the 18,000 crore odd in terms of the PAT number is what we're penciling in. Fairly steady trends, frankly, in terms of asset quality is what is anticipated. Now, what's important to watch out for is credit growth. Largest lender, how quickly can they continue to grow? In terms of corporate as well, the pipeline is robust. Are disbursements getting pushed through? Is there growth visible there? And we saw a couple of banks come out with very good numbers where corporate is concerned. So corporate loan book has come back into the picture. That's something that we will look out for. And of course, then the repo rate cut, and now there is visibility that there's no cut. And therefore, where should margins go? Some visibility around that. Ambrish, what are you looking forward to from the SBI numbers? We've seen a fall on the stock price at least. What next with regard to an SBI, and is this looking good from a buy perspective?
Yeah, like I said, most of the PSU banks I like, and SBI specifically. There's still a further up move, which I see of at least another 15 to 18% more in the next 8 to 9 months. And from the earnings perspective, clearly, I see the loan growth to really stay strong. And possibly you'll see a much better profit growth in Q4 as compared to Q3. Q3 will be, I think, about 7 to 8% sort of a growth we should see in the bottom line.
Okay, so that's on SBI. But Sahaj, talk to us about how some of the PSU banks are shaping up on the charts. Which one would be your preferred pick when it comes to the PSU banking basket?
The entire PSU banking space has been a classic outperformer as compared to the private banks, which have kind of underperformed since quite some time now. And I would like to extend my comments on SBI itself, given the fact that the largest PSU bank has performed really well. I believe if the result provides any kind of a correction into the stock, I would totally be comfortable buying into it. Recently, we witnessed some volatility on account of the budget event, wherein the lows of around 990 were made. So I would say if the stock comes to around 1050, 1040, place a stop loss of around 990, and I would expect new highs to be made in the short term itself. So I would say SBI would be one of the best and the safest picks given the current market situation and the fact that it's outperforming. I would expect this outperformance to continue.
Okay, so that's an SPI on the charts, but just taking a look at one of the top performers from the Nifty 500 group of stocks today, and that's FSN e-commerce or Nykaa, as we popularly know it. Very healthy set of quarter 3 numbers coming in. Revenue in line with what the street was estimating, but a big beat on PAT, EBITDA as well as EBITDA margins. The margins have expanded quite nicely this time at 8% compared to 6.2%, so a good expansion over there. The overall business GMV has also come in at 5,795 crores, which is a beat against street expectations. The beauty and personal care segment has done pretty well for itself. Fashion segment, yes, continues to be in a net loss range, but profitability is not very far is what the management has seen, and we have also in the past seen a couple of quarters where the fashion segment has become profitable. So it's actually dilly-dallying between the red and the green, but not too far away for the profitability when it comes to fashion too. House of Nykaa overall GMV run rate has now crossed 3,500 crores, so looking very healthy over there. eB2B superstore numbers are also very healthy. If you take a look at what the con call highlights are, they're saying that currently Nykaa now is not margin dilutive, which is a big positive. Nykaa now is their quick commerce, fast fashion offering that delivers between 2 to 4 hours on an intraday basis, and that is now available in the top 7 cities of India, so that's a very big positive. In terms of brokerage reactions, Nomura is the one to watch out for, because in their brokerage note, they've upgraded Nykaa to a buy rating from a neutral, also hiked the target price, and target price hike in fact has been done by a lot of brokerages like HSBC, Morgan Stanley, CLSA, Elara, Citi, Goldman Sachs and Axis Capital. All of them have maintained their stance but hiked the target price of this stock. So very healthy move on Nykaa today. The stock is up in excess of 7% as we speak. But while we're talking about the entire BPC space, and that brings me back to overall consumption. Sir, we spoke about FMCG staples, but what's looking good from some of the platform companies, or let's say anything from the broader consumption, consumer discretionary, electronic goods, anything looking good from there?
So from the FMCG space, having scanned through the entire, the stock list of stocks, I think another pick that I would like would be Dabur. Again, that's another stock that's positively placed, because as a trader, I really want momentum to be in place before it really qualifies for acting as an active recommendation. So I think from the positional perspective, Dabur is also quite interesting and healthy. A very long phase of consolidation, and currently the fact that FMCG space is pretty interesting. I'm seeing a very good support at around the 450 mark, currently around 510. Reasonable upside around the initially maybe 580, and then going ahead all-time high is also quite possible. So this is another stock that looks really interesting. Within the FMCG space, I think not everything is expected to really perform with great momentum, because there's a lot of consolidation in certain stocks that could happen in terms of time consolidation. Maybe the price damage is done. So I would continue to be a little selective and ensure that the momentum piece is still fitting into the puzzle.
Okay, now when you're talking about auto stocks, let's put up a GNA Axles. Came out with a very strong set of numbers with margins going from 14% odd to 18% plus. And in fact, the stock has also moved as a result of that. Let's pull up a GNA Axles, and I'll quickly also take you through the numbers. Profits up 26%, revenue flat at 375 crore, EBITDA up 30%, margins